So in our last lesson, when we were looking at market structure, we were looking at some quite aggressive trends. As you can see, we're back on BTC. So aggressive trends, really fast moves up, really fast moves down. Now, obviously, price action isn't always that clear or that action-packed, shall we say. Sometimes there are boring time periods in trading, not just in crypto, obviously in traditional markets as well. And sometimes you'll find that price ends up being in a consolidation range where, pretty similar to this example here of Bitcoin back in the bottom of the bear market in 2018 going into 2019, very, very flat, as you can see, comparing it to this mania that sort of happened in the 2017 run up and then the 2018 bear market. Towards the end of the year and start of 2019, as I say, things got a little bit boring, and it's not a coincidence that this happens just before things flip bullish again. This is where a lot of money is actually swapping hands. So people get bored, people capitulate, and people hand over their assets to, let's quote unquote, strong hands or smart money, etc. So there is obviously a different way of trading this environment as opposed to aggressive trends, and that's when you start looking at ranges. So if we just zoom in to the bottom here and show you how we look at ranges. So again, similar to in our last lesson, we're going to mark out where's our lowest level, i.e. our low, and where's our high. So our absolute low is the start of this trend here. Again, we're on the daily time frame, so using red for our levels. So this is our low here. Okay, we don't know whether this is going to break or not, but so far this is the lowest point. If we start breaking that again, back to our previous lesson, we start making lower lows, etc. But at the moment, this is our low, and then we look up where's our high. So the high is starting trend again. So you've got one here, and then we come down. Not a trend, not a trend. So here, this is the start, and this is the start of this leg that actually brought us down to the bottom as well. So we would mark out this level here. There we go. And as I say, we've got this sort of area here where there's a lot of resistance. So I would say this is the top, and that is obviously confirmed as well by this little test and rejection here. So we've got the bottom of the range and we've got top of the range. Now we need to mark out the mid-range. So there's two tools you can use. You can either use the Fibonacci tool, like so. So you go from low to high, and then what you can do to tidy it up, I'm actually going to get rid of all these numbers apart from the 0.5. Obviously going to keep the top and the bottom, which is 0 and 1, and I'm going to get rid of those and just have the 0.5, because that, as you can imagine, is the middle. Or another tool you can use is the date and price range. Again, you just go from bottom to top, and as you can see, it's got a built-in, basically middle of the range there. So either one of those will do the job. We've got the fib on here, so as I say, this marks out our mid-range. And going back to that house analogy we used right at the beginning, this is our floor, this is our ceiling, this is what would be, the ground floor ceiling or the first floor floor. So again, going back to that analogy, what we would be doing is you want to be long in the bottoms, short in the tops, and then this level here, this mid-range, as I say, you could either try and short it when it comes up as resistance. Once it flips to support, then you can go long, and again, once it comes down, you can try to long it as support, or once it breaks down like we have here, then it becomes resistance, and then you can short. That's how you would play that. And actually, if you look, you can see that one of our levels is actually the perfect mid-range, which is just this level right here. So you can see it a bit more clearly when we move the fib, but this is our low. That is actually our next higher low, because as you can see, there's no next trend there. There's no two green candles in a row until this point. So this would actually, if we were just doing trend work, this would have actually been our level anyway. And if we get rid of the fib, you can see that this is a perfect level of support and resistance. So not only is it a level that we would have identified anyway, as I say, it would have been our higher low, and then as I say, we break it, it becomes resistance, so it would remain on our charts. It actually becomes this high here as well, and this leg of the move, etc. But not only is it a level there, but it's got that confluence of being the mid-range of this range as well. So again, as I said a little bit earlier, you would be looking to long the bottom, short the top until we break out, and then it's obviously broken out of the range. Let's get rid of those and go to another example, which is present day Bitcoin. Let's reset the chart. There we go. So this is present day. As you can see, we're in a phase now where it's a little bit boring, a little bit rangy, pretty much sideways. No aggressive trend in either direction. So again, we're going to mark out our top, mark out our bottom. So our bottom is clearly defined by this point here, and our top. Now, what we could say is that it's here. However, if we look left, you can see that there's a start of this trend here, which actually has a little bit more confluence in terms of being a resistance as well, because we've not got a close over. We've got that rejection there and falling back into the range. So that would actually be my range high. And then again, we've got to find the mid-range. So we'll get our fib back tool back out again and just go here. And again, look at that, perfect. There's a level that we would have identified ourselves with it being a high here and a high here. So we can mark that out, perfect mid-range, and there we go. So again, you'd have had this as the range low, this is the range high. We've come here, we can't break this low, we come up, we reject, you could have shorted the mid-range, you come up, once we've broken back above, you can then think, right, okay, if this holds as support, we can long this back to the range high. Boom, that's what happens. You could have, again, it's all very easy in hindsight, but just showing the how a range works. You then look at shorting the range high. You probably wait for this to confirm. Again, going back to the lesson on when levels are broken, we didn't get a daily candle close above this daily level, so it remained resistance. And on that rejection, you could have gone short down to the mid-range level as your TP1. And there you can see that. You see we're battling it at the moment. It looked like it was lost, reclaimed, and again there's that deviation, and the same thing happened here. Deviation is basically where initially the level looks to be broken, but the very next candle comes up and reclaims it, so it doesn't actually count as a fully broken level. And again, you can see we've deviated it again here, and now we're holding it as a support still. So obviously, it's current day. I don't know what's going to happen here. We'll just have to wait and see. But at the moment, a play could be simple range play. You say, right, well, I'm going to long here, and I'm going to look for the range high. You could obviously take TPs along the way. Just look left for previous resistance. And for me, that previous resistance would be just there. As you can see, resistance, broke above, held as support, then lost. So that would be sort of TP1, and then you can have TP2 at the range high. Likewise, if we break below, you'd obviously jump out of your long if you got into a long, and then you could look to try and short down to the range lows. So a little less there on ranges, consolidation ranges. As I say, its price isn't always up and down like a yo-yo, fast-paced action. Sometimes you get these long, boring sideways consolidations, and this is how you trade them. You just look to long the bottoms, short the tops, and obviously be aware of the mid-range, where it is, and how to utilize it. One very good phrase to remember is don't diddle in the middle, which is quite a good one. It basically means unless you're getting in on one of these entry points, whether it being the bottom of the range, top of the range, or the mid-range, don't make an entry unless it's on one of those. Like, don't try and get in here because you'll just get chopped to pieces. Try and identify those ideal entries, which, as I say, will be the top or bottom of the range, or if there's a reaction at the mid-range. So, as I say, remember, don't diddle in the middle.